Hello and welcome to today's daily review and analysis for the 7th February 2024. First, we're going straight into the US dollar index. It is currently in the downtrend at 104.20 as investors react to a profit taking and a warning from Cleveland Fed President Loretta Messer about the risk of tightening monetary policy. The index has reached 104.60 earlier due to a strong economic data, reducing expectations of a March rate cut. Federal Reserve Chairman Jerome Powell emphasized monitoring inflation to achieve the 2% target. And on the daily chart, the Relative Strength Index RSI suggests a potential momentum shift in the near term, nearing overbought conditions. However, the index remains above key moving averages, indicating substantial bullish momentum. Despite the RSI, the broader technical landscape supports a bullish outlook. Upside targets are 104.62 and 105. Today's suggestion is to consider shorting the US dollar index near 104.32 with a stop loss at 104.50 and targets at 103.95 and 103.80. The US WTI crude oil increased by about 0.87% despite Fed officials resisting rate cut expectations. A weakened US dollar and the US Department of Energy report lowering oil production contributed to the rise from a low of $72.41. Geopolitical tensions in the Middle East and Russia actions in Ukraine, coupled with strong US economic data, may limit oil price declines. Potential higher Fed rates driven by the robust PMI and MFP data could impact the dollar and oil prices. The crude oil prices, after a sharp early February decline, stabilized with a support from a short-term uptrend line. Potential resistance level includes 74.03, a 21-day moving average, 74.07, 23.6% Fibonacci bounce level, and 75.30, which is sideways channel on daily chart. Alternatively, if sellers regain control, key support levels are 71.80, 71.77, which is 200-week moving average, with a possible retracement to 70 and 69.34, low of January 3. A trading suggestion advises considering a long position near 73.20 with a stop loss at 72.90 and targets at 74.20 and 74.40. The gold price rose above 2039, rebounding from a one-week low of 2015 during the Asian session. The increase was attributed to more than 1% drop in the 10-year US Treasury note yield and the dollar's retreat from a multi-month high. However, the gold faced challenges in sustaining its recovery amid mixed signals from the Federal Reserve policymakers. The daily chart indicates a potential shift in favor of gold sellers if key support levels at 2015 and 2015.50 are breached, with a downside target of 2000. On the upside, overcoming resistance at 2035 could pave the way for reaching 2041 and the psychological level of 2050. A trading suggestion recommends considering a long position in gold before 2033, setting a stop loss at 2030 with targets at 2045 and 2048. Next is the AUD USD. It rebounded above 0.65, driven by a corrective decline in the US dollar and the Reserve Bank of Australia RBA hawkish stance. Following the RBA's decision to keep up with the official cash rate unchanged at 4.35%, AUD USD remained higher, near 0.6515, up 0.49% on the day. The technical outlook suggests a bearish trend, with Friday's close below the 100-day moving average for the first time since November. Oscillators on the daily chart indicates a negative sentiment, supporting a near-term bearish outlook for AUD USD. The key levels include potential support at 0.65 and 0.6468, with the resistance at 0.6570 and 0.66. Traders may consider a long position before 0.65, with the stop loss at 0.6480 and targets at 0.655 and 0.656. For the US dollar Japan yen, it edged lower, approaching this week's high, following Federal Reserve Chairman Powell's hawkish comments, contrasting with strong US job growth. The US Treasuries are on the rise, and strong economic data supports the dollars. Despite the Bank of Japan hinting at a negative interest rate policy, Japan's data suggests a significant amount of currency remains. USD Japan Yen is trading around 148.60, holding high after rallying above 10148 last week. Technical analysis indicates the need to break above 148.75 to 148.80 for bullish control. Further gains could target 149 and 149.15. On the downside, 148 serves as a support with the 100-day moving average at 147.56 as a key level. A break below could trigger a sell-off towards 147, 146.75, and 146.70, and potentially 146.44 and 146.30. A trading suggestion recommends shorting the USD at 148.10 with stop loss at 148.30 and targets at 147.10 and 147. The British pound US dollar gained momentum, reaching 1.26 during the US session after rebounding from multi-week lows of 1.2518. The dollar struggled to maintain strength amid mixed signals from Wall Street and expectations from an early Federal Reserve rate cut diminish. The US ISM Services PMI climbing to 53.4 in January reduced the likelihood of a March rate cut. The Bank of England chief economist Hugh Peel suggested potential rate cuts in the UK, impacting British pound US dollar. Technically, the pair fell below the 200-day moving average of 1.2560, with a potential downside targets at 1.25 and 1.2468. The resistance level are at 1.26 and 1.2675. A trading suggestion advises going long on GBP before 1.2580, setting a stop loss at 1.2560 with targets at 1.2630 and 1.2640. Lastly is the Euro US dollar. It experienced a volatile session on Tuesday as investors awaited signals on central bank interest rate decisions. Opening the week at 1.0780, the pair dipped to multi-week lows near 1.0720, reaching a 12-week low and moving below the 200-hourly moving average. The OECD's expectation of pan-European inflation staying above the ECB's 2% level until after 2025 dampened expectations for an ECB rate cut, putting pressure on the euro. Despite a rebound on Monday night, Euro US dollar remains below the recent consolidation near the 200-day moving average at 1.0835. The key levels include 1.07 and if breached, potential targets at 1.0656 and 1.0611, which is 76.4% Fibonacci retracement. A trading suggestion recommends going long on euro before 1.0735, setting a stop loss at 1.0720 and targets at 1.0790 and 1.0795. And that concludes our daily analysis for today. If you have any questions, feel free to reach out to us.